Today I'm going to be going over another company that's part of the S&P. We're going to be looking at Coca-Cola today. And basically we're going to be looking at the charts. First, I want to look at this on a weekly. And I want to get a general idea of how much it moves in a week. Because the goal of this strategy is to look at these stocks, buy a week contract, and find a dollar difference within that week. So you have to find a range and you have to find a dollar difference. Now, you want to set a goal of $1 because the stock itself, it's not going to move on a regular basis. It's not going to move a lot. On average, it might go 50 to $1, 50 cents to $1. So we really want to find the assets that can move, 50 cents to $1, and then once you find that, you trade it with options and you basically can scale up. So we're going to be looking at Coca-Cola. We're going to be looking at how much it moves in a week. And we're going to be looking at the options part of it. And if you can purchase it by day or by week, what we need to do is just buy these contracts weekly and then just try to find a range of $1 when you're trading these assets. So today we're looking at Coca-Cola. We're going to look at the options part of it first, and then we're going to be looking at the weekly part of it, and then we'll look at some general strategies that you can do to find the dollar difference every single week. Okay, so right now we can look at Coca-Cola and see the price is $71. So pre-market it's only moved 2 cents. So let's go and look at the options part of it. And let's real quickly look at puts. And right away we could tell that these are weekly. So when you're purchasing this with options, I would suggest doing weekly. Now when you're doing weekly, that does not mean you need to hold these for a week. You basically buy your week contracts, wait for a 50 cent to $1 move, and then sell at profit, basically. So real quickly, we'll see how much it cost. Now, what I like focusing on is getting as close to the dot as possible. So this would have been a good one. So right here for a put, we'd be looking at about $400. And basically what you want to do, saying the break even is at about $71.95. So basically what you want to aim for with a put is you want to go to $1 less of that amount. So when you're in the trade, you want to look for a $70 range, 70. So right around, well, $100 is right about here. So yes, so $1 down from that price will make you $100. So basically, if you want to, so you can see right now with one contract, it's $400. If you go to 2 contracts, that same move is going to get you, that same move will get you about $200. So 2 contracts. So for every contract, you're actually increasing your income by $100 if you can find a dollar difference every single week. And of course, 3 contracts will give you $300. 4 contracts will give you $400 a week to find that dollar difference, costing right now about $1,620. And then 5 contracts, which is a good number. 5 contracts will get you $500 a week if you can find that $1 difference. So if you go to 70, yeah, right around here, you'll make your $500. So that's kind of the strategy going. You buy your week contracts, and then you look for a dollar difference every single week, basically. So let's real quickly look at the patterns. Okay, so what we want to look for first with this strategy is we want to understand how much it moves in a week. Because if we understand how much it moves in a week, we can kind of generally define the range of that. So we're not going to go this because this week isn't finished yet. So let's just look at this one right here. And we'll go down here. It's right about here. So last week it moved about $1.94. So within that range, you would have to find $1. You'd have to find $1 within that range. So you would have had to find $1 difference between $72 to $70. So that would be, you would have to find $1 within that, within a week, basically. So let's look at the previous week here. This one right here. It went about here. So again, it went to $1.51 in a week. And it went from 72 to about $70. So you would have to find $1 within that range. And then let's look at the other week here. Let's just do a couple of weeks to get a good idea here. Got this one right here, down here, right about here. This was about a $2 move in a week. Like I said, these moves are not big. So it went from 72.31 to about 70.35. So you would have to find $1 within that range. Now there's weeks like the last week. This week might have screwed a lot of people up because it didn't move a lot. It moved by $3, but you see how much it actually moved this week. Wasn't a lot. But anyway, you get the general idea. You have some good weeks here. These look like bigger ones. Let's just real quickly look at these. And we'll see. This was a $3 move in a week. Well, $3.48. So typically look for a $2 to $3 move per week. And once you figure that out, you just have to figure out the range. Now, one way to do this intraday. Now you will be buying your week contracts. What I look for, I'll go to the hour. We want to go to the hour. And I'm not really going over trading strategies, but I do talk about a lot of them on my channel. Basically, you want to get a good idea of the direction. And if you could do the L&L trend system, which is pretty, it's my most popular method, but you could tell, but the L&L trend system here, we see the last cross was right here, where this was the start of it going up. And because it has not crossed yet, the trend is still up. Even though it's retracing a bit, the overall trend is going up. So what I would look for basically is, we see that on the day here that it has crossed up. And it has not crossed down. It'll officially go into a downtrend if the lines on the day are crossing right here. So what I would do is I would focus on uptrend. And by doing that, I would go here to the hour. So I would basically look at the L&L trend system and find basically on the hour. Now you are buying week contracts, but you can study the charts to get better entry points, which is what I recommend. Don't just buy weekly contracts on the fly. Make sure you are also studying the charts. But you see it's crossing here. This would be a good point to get in and out. It would be a good point to find your dollar right here. You could have wrote that out, and that's 85 cents right there, so that's almost $1. And then you see it cross again right here. So right about here you would enter, ride this out, and you got your dollar right there. Now, if you want to do this more intraday, you will still have to buy your weekly contracts. But another strategy, we can turn off the L&L for this strategy. You want to focus on your last 15-minute candle. You want to get your high, which is right here. You want to get your low, which is right here. And basically, you're looking at this, and if price gets above this, and we know that it's going in an uptrend, if price gets above this, it'll go up. It could get rejected and come down, so you could actually ride this where it bounces its head right here. You could get this, and this won't be $1, but you'll find, 43 cents, so you would make like $43. But there's something like that. But personally, me, I would try following the L and L for the best results, or for finding the signals. But anyway, that's what I would do for Coca-Cola. If you're riding this on a week, you have basically a week for it to go to $1. You have a week for it to go to that dollar within that range. So the goal of this is to find $1. You have to find that $1 difference every single week. So once you do that, you can start scaling it up. And you start with one contract, and then you can just scale it up. So basically, that's basically how you make profit trading Coca-Cola. So what you have to do, you buy your week contracts, and then whether it's going up or down, you have to find $1 difference every week. And if you can do that, start with one contract and try to go as close to that dot as possible. And once you do that, you just find your $1 difference. And then if you get good at that, you can scale it up to 2 contracts, 3 contracts, 4 contracts. And over time, you can just all these small little stocks that are not the S&P, it's a lot easier to find those $1 a weeks compared to trading like SPY, because SPY moves a lot faster. So if you focus on the individual companies and doing options with them, you won't make as much as trading like SPY, but you can create passive income every single week. Small little amounts here to like $50 to $100, and then you could scale it up over time. But to me, this seems like the easiest thing to do. But anyway, if you guys like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.